You're watching today's Daily Market Comment by Haralambos Pisuros. I'm Christina Marujos, and thank you for joining us here at XM.com. The US dollar traded mixed against the other major currencies yesterday and continued in a similar fashion today. Dollar traders seem to be avoiding heavy positioning ahead of today's US CPI data. The forecasts are for both the headline and core rates to have continued to decline, something that could support investors' view of a Fed pivot at some point this year. Despite Fed officials adamantly favoring raising rates to above 5% and staying on hold thereafter, market participants remain unconvinced that the Fed could outpace their expectations while stubbornly maintaining bets of around 50 basis points worth of rate reductions by the end of the year. Such expectations are likely to keep the US dollar in a downtrend for a while longer, but how the currency may react at the time of the release is likely to depend on how the actual numbers compare to the forecasts. The dollar has been underperforming most of the other major currencies the last few months, but there are a couple that could perform better than others. One of them may be the euro. In contrast to the US, underlying inflation in the euro area is still accelerating, which validates the view that the ECB may continue tightening more aggressively than the Fed. The good weather is also giving a helping hand to the common currency as it eases concerns with regards to the performance of the European economy. Euro-dollar is slowly getting closer to the important barrier of 108, the break of which could carry larger bullish implications. Another currency that could perform well against the greenback in the coming months may be the yen. A newspaper reported today that Bank of Japan officials will review the side effects of monetary easing at next week's gathering and may proceed with additional action to correct distortions in the yield curve. The yen strengthened today following the headlines, while concerns about the performance of the global economy could also prove beneficial through safe haven inflows. As for the commodity-linked currencies, they have been gaining ground recently due to news about China's reopening, but should upcoming headlines and developments reignite fears of economic complications due to soaring COVID infections, those currencies may easily come under pressure. Wall Street ended Wednesday sharply up, adding to the hypothesis that a slowdown in today's inflation data may be already expected. They may extend their gains in case the data surprises to the downside. However, the outlook likely remains gloomy as increasing fears about the performance of the US economy could force equities to resume their downtrend at some point soon. This was a Daily Market Comment. Thank you for joining us at XM.com.